Finance Show with Joe. He's Joe, I'm just some schmo, and we've got Matty back again. We just love having him around.
That is my cousin. He is from the area. I'm 100% down, you know? How you been, man? Tell me.
Good. Thank you for having me on the show once again, guys. I really appreciate it. I'm very excited to uncover a few very different topics that we haven't really spoken about on the show. So,
I don't know. I say Perth here.
Yeah, we've spoken about Bunbury a few times. Yeah.
Yeah. I want to say the property market went through a bit of a lull, and you and I discussed this on
We
the
did
last
talk about
episode.
this, yeah.
Like July, August,
It's a
the
winter
activity
phase.
was weird. But September's come around, and there seems to be like is it a micro boom? Is it a miniature boom? I don't know what to call it.
I think it's sentiment that's driving the market. So going back to July, August, I think we were at a crossroads where as a nation, we didn't really know where the economy was going. Obviously, right now, there's still talks about, are interest rates going to increase? Are they going to decrease? When is that going to happen? What's the RBA going to do?
Yeah.
But I think for the most part, everyone is relatively confident that either at the end of this year or at some point next year, the RBA is going to start cutting rates and interest rates will come down.
I'm so confused about the interest rate situation
Yeah, I don't know.
because
I'm keen for them to drop.
so what I see on my end as a broker is a lot of the fixed rates have come down by like 50 basis points.
Yeah.
So Macquarie, if you fix an owner-occupied loan right now, I think 80% or less LVR. So just for everyone to understand, if you've got a 20% deposit and you're borrowing 80% from the bank, they will, if you fix your loan, so a fixed rate mortgage for 2 years, offer you 5.59%, which is incredibly low compared to what we've been seeing over the last 18 months of interest rates hovering around that 6 to 7% mark. But then a report comes out today saying ANZ is tipping on Tuesday for interest rates to rise. Is there too many buyers in the market? Is there what is happening? Is there enough supply in Perth? That's my biggest question. Because
How's Perth
How
going?
is-
I
how
need
is
to know.
Perth?
Is it okay?
Yeah. So, look, Perth is one of the markets, and I say this to all the clients that we're sort of speaking to at the moment and sourcing properties for. I think we have a finite opportunity in the market to get into capital cities before they're considered unaffordable.
Okay.
Perth has obviously gone through such a tremendous level of equity uplift and obviously a property boom over the last 15 to 18 months, right? What we're sort of seeing, because we're still, on the ground in Perth, we have colleagues that are going to open homes on our behalf and property managers that we work with that are there, right? So in terms of, I guess, the commentary that we're hearing and what we're seeing is that buyer activity from investors is starting to slow down.
Okay.
Yes. So it's creating more of an opportunity for local buyers to actually come back into the market, because a pain point for Perth citizens at one point is that they were just getting completely priced out by
Investors.
East Coast investors, right? And they just absolutely hated us because we had higher borrowing capacities than them, more equity.
East side, baby. East side.
But they hated us, and even I guess real estate agents were sort of not really wanting to work at one point, with buyers agents, but that's kind of completely died out.
I saw an amazing statistic the other day that Perth has been growing by $1,000 a day, like across the whole, like the Perth LGA, Greater Perth area, whatever you want to call it.
Yeah.
That has been growing by $1,000 a day. So if you bought a house last year for $500,000, this date last year, it is worth $865,000 on average across the state. I don't want to say it's insane because I use that word too often on this podcast, but that is better than a lot of stocks. That's
Better than crypto.
Better than crypto. We know how much I hate crypto, but it's better than crypto. It's better than the stock market. It's better than a lot of bonds. It's better than futures. In a time in the world where people are struggling to make money, it just seems like that whole city is doing remarkably well.
Yeah.
What are the key suburbs that we're seeing that are really like getting that uplift?
For sure. Look, a lot of suburbs across Perth, like it was at one point, it was almost like you could throw a dart at the map and just pick any suburb and buy, and you'll do well. Where you need to be very critical about the choice moving forward if you want to invest in Perth. Why I say this is, as we see investor activity leave the market in areas that are predominantly driven by investors, I believe they'll start to go through a bit of a downturn because all of a sudden you take all this level of demand out of a market that is driven by investors. You know, that market isn't propped up by those buyers anymore. It'll obviously go through a bit of a downtrend, in my humble opinion, right?
Yeah.
With that being said, there are lots of locations and suburbs still within Perth that are predominantly driven by owner occupiers. And now that the investor focus is starting to leave and go to other places around the country, it's creating an opportunity for local buyers to actually, be able to afford to get into the market. Yeah. So they're still buying up all of these properties, and there's still a greater demand than there is supply. So we have continued to see price increases, every week, the prices go up, right? So I guess the point that I'm trying to make is with opportunity in the market, it's really, I feel, solely based around suburbs that are considered affordable, right? So, inner city locations in Perth, I'm not going to tell all my trade secrets, but there are, pockets that are 9 to sort of 14 kilometers away from the CBD where you can still get property sub 650,000 with a 6% yield.
So I'm just going to let our camera guy know, Liam just got pre-approved. I'm not supposed to say that out loud. Maybe we should cut that. I'm just going to let our camera guy know, who will remain anonymous because they just got pre-approved.
Very good.
Thank you. And just listen to what Matty. Yeah, I'm allowed to say his name. Matty has to say. So you were talking about investors leaving the market, and you're seeing things drop. And I did have this for a later segment in the show, but there is one key state that I do want to bring up.
Yes,
Victoria. So that was driven heavily by investors.
Yeah. They're leaving in droves now, aren't they?
They've left in droves.
Oh, they've left in droves, yeah.
COVID smashed them because people couldn't come in or work or do anything.
Dan Andrews smashed them.
Yeah. Don't worry about that bloke. I've got some stories about him that I'm allowed to say on the air. But Dan Andrews, no, sorry. No, but Victoria, we've seen properties drop 2% again. And
they dropped last time we were speaking.
Yeah,
they dropped again.
Oh,
they dropped again. Rental yield is, is it okay?
No. Oh, look, it's increasing. In the grand scheme of what a good rental yield needs to be, with interest rates being at 6.5%, no, they're still not okay, but they're definitely increasing, and we'll touch on.
I'll just ask the question now, because we're seeing this lull in the market, dip in the market. Melbourne is still Australia's biggest city.
Yeah.
They've actually got a larger population than Sydney. It's just New South Wales is bigger in general. But the question I'm posing to you is now a good time for people to just kind of get into that Melbourne market? Or are we thinking steer clear just because we're not seeing the ROI?
Look, I think my thought process on this is the market could still go either way, right? So essentially, the data is getting stronger, especially around rental yields increasing. Vacancy rates have been reducing, which is quite strong. The market sentiment is not where it needs to be, and I think it's based on a couple of points around land tax, around low rental yields, around unaffordability of the local buyers, but also, investors from other states. Obviously looking at places like Perth and Adelaide as affordable places to invest with higher levels of yield. But as these affordable locations that we've been seeing in the past become unaffordable, it creates an opportunity where markets work in cycles at the end of the day, right? So I definitely think that we should start talking about Melbourne. Is it the right time to invest now? I think that question needs to be answered by, is it fundamentally right for you to invest in Melbourne now?
So
because
based on your specific financial situation,
If it's your first property, I I wouldn't be looking at it as an investor. If I'm purchasing my first investment, I want to get fast capital gain and I want to get good rental yield.
Yes.
Which is why I'm looking at WA, northern parts of Adelaide. I wouldn't even look at Tasmania, and I've been an advocate for Tasmania for a long time. And I'd probably be looking at areas around Brisbane. Those are the 3 pockets right now in Australia where you can achieve those things. I'm not too sure about Darwin. Not too sure. I don't want to get.
Is anyone too sure about
No,
Darwin?
I don't know.
What's going on there?
But with Victoria, it's more of an accumulation play. So
100%.
if I've got 5, 10 properties, okay, which not a lot of people do, but if I've got an accumulation of wealth and I'm thinking to myself, okay, I've invested in Perth, I've invested in Sydney, I've got 1 in Brisbane, 1 in Adelaide, and now I want to diversify my portfolio. Hey, that looks like a bargain. It's in a great spot in the city, and I'm going to say St Kilda just because it's one place that I know. Oh, St Kilda's undervalued. Okay, I'm going to go purchase there as opposed to putting my money in another spot in Perth, because we've seen WA 2014, after all the miners left previously, there was an issue with the market.
For sure.
But now we're seeing the comeback, and on the back of the comeback, they're investing more in the infrastructure of the city.
Yep.
Are they still blocking, limiting the amount of investors allowed to buy in Perth?
For new development, yes.
For new development, okay.
Yeah, so for new land, yes. They're still controlling that 80-20 rule, which is, I think, one of the best things that they're doing.
Because I feel like that would limit that crash again, right? 14?
Yeah, when you look at, I guess, industry as well, it's a lot more diversified than what it was back in 2014 when it was predominantly driven by mining.
They also brought in a new short-term rental where they're trying to limit the amount of short-term rentals that exist in WA, because you just had people coming and buying in droves and using it for Airbnb.
Yeah, and fly in, fly out.
Yeah. Oh, so FIFO
Workers would just live in like co-living type arrangements.
Really?
Yeah, renting rooms. Yeah, because they're not there for weeks at a time,
What are some recent projects that you're able to discuss?
For sure.
Give me something. Give me something good.
Yeah, I really like regional Victoria. I know
Okay.
we're talking about Melbourne. Is it the right time to invest? We'll uncover that a little bit later in the segment because I have my thoughts about Melbourne. But to touch on recent projects and recent, I guess, areas that we've been very big fans of, regional Victoria. You're talking sort of an hour 30 to an hour 50 away from Melbourne CBD. I call it the Newcastle equivalent of Melbourne.
Well, so like Geelong?
Yeah, well, satellite cities, right? So you have Geelong, you have Bendigo, you have Ballarat, and then you have the Latrobe Valley region. The Latrobe Valley region is where I sort of have my eyes on at the moment because there's hundreds of millions of dollars of infrastructure coming in to these suburbs within the Latrobe Valley region. Over the next 5 years, they're all around like renewable energy, solar, wind farming, 50 to 100,000 new jobs, and more than $100 million of infrastructure coming into, one local government area. Historically, whenever we've seen that happen, it's always drives prices. But we're talking established properties from 350 to 400,000 with a 6% rental yield, an hour and 50 minutes away from Melbourne CBD.
That's pretty good.
Yep.
That's pretty good. And are we talking freestanding houses so freestanding complete?
Yeah.
And 6 or 7% rental yield.
Yeah,
so
4 to 500 square meter blocks.
So you're covering your mortgage, and then on top of that, you've got the opportunity for capital growth.
Yep.
Yeah, can I buy some?
If you know a cameraman with a pre-approval, let him know.
So how do you come across this area?
Look by chance, actually.
I'm just going to mention, I've never heard, we're accredited with 40 lenders. I know Latrobe as one of the banks that I have to go to. I didn't actually know about this Latrobe Valley area. Is it like the Barossa Valley? They do wine?
It's in Gippsland.
So how'd you come across this one?
So we actually came across this opportunity by a developer friend of mine who was speaking to me about land and house packages in the location.
Okay.
I think opportunity, and he'll probably watch this video, so I apologize in advance. But house and land packages in that area, you're looking at about 600 to 650, whereas you can buy established properties for 400,000. So to me, that's like creating an opportunity
Yeah.
for the established market.
Yeah.
Buying an established property as all of these new developments start to complete over the next couple of years, setting a new benchmark for pricing.
Yeah.
As long as obviously the demand continues to outweigh the supply and they don't just all of a sudden bring hundreds of lots to the market.
With established properties, you can't claim as much depreciation.
Correct.
Yeah. So if you are an investor and you are looking to acquire more property, your biggest thing is to try and drive your tax lower.
100%.
And you can't drive your tax lower, as well with an established property as you can with a brand new property. On top of that, with everything I just mentioned, there's a good chance that the established properties, whilst they are at a great price point, the difference when you're using a deposit, one would be 40,000, the other one would be 60,000 for a 10% deposit.
For sure.
But with a $60,000 deposit, $20,000 more, you're getting $200,000 more property. And on top of that, you're getting better negative gearing, you're getting better tax implications.
Yep.
My general advice to buyers out there is don't always just look at price. Look at quality.
For sure.
Look at what you're purchasing. Look, like you might purchase something that is established, but guess what? It might come with a lot more issues.
Yeah. And it comes down to unique individual scenario as well, right? So understanding the pros and cons of both brand new and established and deciding what is the right option for me to invest in is probably the right way to look at it, right? Because there are great properties all over the country that are brand new and established. But ultimately, my advice to any client is understand the pros and cons of what brand new property looks like and what established property looks like for you, and make the most informed decision that you can based on the facts. And as a business, that's why from an early stage we've decided to offer both brand new and established property, because we genuinely feel in the market there's always great brand new opportunities and there's always really good established options, but it genuinely comes down to each individual circumstance and what the right opportunity for them is.
Building out a borrower profile or a buyer profile, you're actually trying to understand their goals, what they're trying to achieve, and you're just trying to make sure that you secure them the best location. What other locations in Victoria? You wanted to talk about Melbourne a bit more, did you?
Yes. So with Melbourne, I mean, look, Warren Buffett has a famous quote.
Here we go.
The quote is, "Be fearful when others are greedy and greedy when others are fearful."
Yeah.
So essentially what that's telling us is invest counter-cyclical to the market, right? And right now, Melbourne is a buyer's market.
Yeah.
But I would say to anyone who's thinking about Melbourne and thinking about, is it the right time for me to invest in Melbourne? Understand the price points that you're looking at, understand the rental returns that you're looking at, and depending on the deposit that you're actually going to put towards this investment, do a cash flow analysis and decide is holding this property on a week-to-week basis actually going to be comfortable for me? Because we can look at the long term, and yes, Melbourne's at the bottom of the market, and yes, it's the second largest CBD, and yes, it's historically had one of the most consistent levels of capital growth year on year. Just because it's gone through a little bit of a downturn in the last, 12 months, 15, 18 months, doesn't mean that it's going to continue going in a downtrend.
But they're also approving the most amount of dwellings. That's the one thing that I'm kind of looking at. So me as a buyer, and I'm always looking at property, and it's supply and demand.
Yeah.
Okay.
Simple economics.
Yeah. Like I was talking to a client recently, and she was just telling me about Docklands, and she was like, that whole sector, they wanted it to be like Sydney Harbour. They didn't think it through because that literally, I'm pretty sure Docklands faces Tasmania and it gets super cold.
Yep.
So there's no nightlife down there. I went down there once at night, and I thought
It'll be buzzing.
There, it's a ghost town. It's crazy how they just didn't provide enough, infrastructure, enough culture there. And Melbourne's known for its culture.
Yeah. The issue there is they just rezoned the whole area. And just all of your cousins just came in.
Yeah, we make fun of Lebs on this show. That's awesome. But it's just, I'm looking at Melbourne. I personally, for my situation, my scenario, I can take a risk. Okay? I've been in this game for 14 years. I've seen property go up and down. I've seen Wollongong bust and I've seen Wollongong boom.
Yeah.
Okay. And I've done one well in Wollongong, but I've done it. I've
Yeah.
been there. I get people turning to me and they're like, oh, my property hasn't gone up in value in 3 months. I'm like, bro, you bought it 3 months ago. Like, give it 2 years or something, you know? And then they'll tell me, oh, but my friend at a barbecue made this much money. How long have they held the property for? 2 years. Yeah, that's why. Okay.
Listen.
So I think in my particular, like, I'm looking at Melbourne and I'm looking hard because I'm like, oh, okay, there's some opportunity there. But you go to Melbourne. All right, I've ragged on Melbourne a lot previously, but you know, it's fun.
You like it?
Yeah. I like food.
Yeah, fair enough.
Yeah,
there's plenty of it.
No, the coffee thing is overblown.
Yeah.
Sydney coffee, like you go down there to
This one's fantastic.
yeah, you see
100%.
Mackie down there, one of the best in Sydney. Greek, you know the Greeks, they know how to make a good coffee. But they've got the nightlife, they've got all that stuff. We don't have that in Sydney. Sydney's a morning city.
Yeah.
So I would actually look at it because even though they are approving a lot of dwellings, even though they do have those things, I can wear the risk and I can see the future. The future to me says they still get all the big sporting events.
Yep.
Okay, the Olympics went to Brisbane, but everything else is down there. They still have, I think, the highest amount of new students moving to the city. And they always are investing in their infrastructure. It's so much easier to get around Melbourne than it is Sydney.
Unless you're trying to get there from the airport.
Yeah, okay. That is true. But that's the only thing. Like just going from the airport's in Essendon or Kilo or
It's like an hour away from CBD.
yeah,
Something
that
like
that
Depends
is
on the airport. They have to.
Oh,
Tullamarine
they
and
do have
Avalon.
to,
yeah.
yeah.
But from Tullamarine to the city is a 35-minute drive. But after that, you're pretty sweet.
Okay.
But that's what Sydney's going to be. Once the second one opens,
Western
Batteries
Sydney
Creek,
one.
yeah.
by 2040. So they're not expecting it to be fully functional until 2040, even though it's opening soon.
I was going to say 2040, really?
Yeah, but they're expecting that's when they're going to be able to churn the most amount of people.
Oh, okay.
But, you know, once that's open, I'm telling you now, Mascot is not going to be as busy because that one in, what suburb is it? in?
Badgerys Creek.
That's the one, Badgerys Creek. That's going to be able to be 24 hour. You're going to be able to land at
Yeah.
3 a.m.
Yeah.
Sydney, if you don't land by 10:55, you're going to a different airport.
Yep. It's the only airport in Australia, I believe, that has a cutoff.
Yeah.
It's not 24/7.
Well, it's like the only major airport internationally that does that as well.
Yeah.
Yeah, sound restrictions, man. They just, all the NIMBYs.
I live near the airport. I can't believe there's all these planes around.
Yeah, I know, right? Oh,
Yeah.
but the houses do shake there.
They do.
Yeah, I was in Marrickville,
Yeah.
and there was one landing over us, and my brother-in-law was with us. I wish I got a video of this, and he thought the plane was, going to land on us.
Crashing.
No. So listen to what he does. Okay, my brother-in-law is taller than me.
Yeah.
Okay, he's skinnier, but like he's a,
tall.
he's a solid guy. He works out. He runs and he hides behind me. Like I'm going to stop the plane with
like
my hands
Superman.
like this. Okay. He was freaked out. He's like, shit. And he comes and he literally tucks himself behind me. And I'll look around and I go, Alison, is your brother okay? What am I going to do against the plane right now? But it was just yeah, that was a very
At least
very-
he likes you.
Yeah, I don't think that's. I don't know. If he liked me, he'd jump in front of it.
Take him instead. Wait, I just wanted to get back to Melbourne because you were saying for different buyers and different situations and stuff like that. Does this mean like it's a good thing for renters? Like the
Yeah.
situation is quite good for them?
Good
Yeah.
question. Yeah. So I think in Melbourne, it's probably one of the best areas to rent vest at the moment. Sydney and Melbourne, right? So
No, but Melbourne for sure.
Yeah.
Melbourne for rent vesting would be phenomenal.
Because your rent itself, it would be cheaper. Like you
well,
said,
yeah, the yields
lower.
are like 3.5% in
Yeah.
some pockets. Your rent is way cheaper than what you'd have a mortgage for.
If you are a student and you are detached, like so you've moved to Australia or you've moved like you don't have a large family. You don't have a large Lebanese family
Yeah.
with everybody freaking out if you move 20 minutes down the road, basically. Okay. But if you don't have that and you're able to live somewhere, I would personally, Melbourne would be the spot for me.
Yeah. Makes
Okay.
sense.
More culture. It's easier to make friends down there.
Sydney's very cliquey.
Sydney's extreme. Bro, if I go to the North Shore, they're going to look at me and they're going to be like, you're not from here. You smell different. Very, very different. Melbourne, obviously, I've only ever been there as a tourist. I've never actually lived there, but I don't feel that sentiment. And I feel like there's pockets for everything. If you are into cars, they've got a car culture.
Yeah.
If you are into restaurants, you've got restaurant culture. If you are emo, they probably still have that. Is that still a thing?
I mean, like, there's emo nights at clubs and stuff.
Yeah,
I don't know if there's like an actual scene anymore. Yeah, cliff dive here.
To answer your question, I think
Yeah.
investing in Melbourne, if you were going to do it and you're detached, I think it's probably the best city to do it. Moving on, interesting news about interest rates.
Oh, yeah.
Okay. So the Federal Reserve, the US,
There are RBA.
RBA.
yeah, the RBA.
Yeah.
Are you a mortgage broker? Because I'm not. But their version of the Reserve Bank of Australia has dropped their interest rates by 0.5%. And, you know, we've had the tipping. We discussed it earlier, but, you know, the fixed rates are going down. They're saying that the rates are not going to be cut this Tuesday.
No.
They're going to hold or they might increase. I don't know. Australia does follow the US quite closely, but they also follow New Zealand quite closely too.
Yeah.
And you and I looked at the data for consumer spending.
Ah, yes.
It's gone to shit. Like nobody's buying shit anymore.
Nobody can afford anything.
Unemployment is still at 4.2%. And that's the reason why they're like, that's a cliff they're dying on. They're like, nah, too many people are working. We can't drop the interest rates yet.
Yeah.
Do you expect to be like a proper property boom?
Yeah, for sure.
Yeah.
We're already getting busier and busier because of just purely based on sentiment. Like people are thinking the interest rates are dropping, so they're wanting to buy property. As soon as we see interest rates drop, I think we're just going to go through a frenzy like we did in 2019.
Yeah. Makes sense.
One thing that I remember when interest rates started to go up was we saw Europe, we saw the Fed closely followed, US, and then we did, right? So I wonder if it's going to have the same impact this time around when America starts to reduce their rates. When they do, are we going to closely follow that as well?
The biggest issue is if America drops their interest rates, their spending power goes up. That means inflation goes up over there.
Yeah.
So that means we're going to have less money to be able to import goods from the States.
Yeah.
But they're going to have more money to export goods from us, which is the way that we've got to think about it as well.
Yeah.
We export a lot to the States. We
Yeah.
export, you know, a lot of minerals, but we also export have you
Agriculture.
ever been to the States?
No, remember.
You watch the commercials for fast food, they're like 100% Australian beef.
Yeah.
Like, and they're so proud to have like Australian beef. You're going to have large corporations making more money.
Yeah. I mean,
But-
they're already making record profits.
It's going to, if we don't drop our interest rates, they're going to be making the profits,
Yeah.
okay, on the exports. But the regular Australian folk
Yeah.
are actually going to be losing out because if we need to import something from overseas, the prices are just going to go up.
Yeah. And then it's
And
just
we
going
keep
to cost
selling
us
everything too.
Yeah.
Yeah.
Like we've got all this stuff and yet we import it
Yeah.
still.
Yeah.
Uranium, that's no, not uranium. What's the weird gas?
Gas. I don't know why why do we do that with gas? We have so much natural gas and we sell all of it and then buy it back.
That's Howard's fault.
Oh, is it?
Yeah, that's Johnny Howard's fault. He
Damn
made that
eyebrows.
agreement.
Stress again.
He made that agreement back in 96, 97.
Yeah.
And yeah, that
Was
just
one, so
it was just one agreement and that was it.
Imagine making like changing a policy that just affects a country forever.
well, he did GST, right?
Yeah.
That's changed everything.
I like GST.
Yeah.
I never lived in a world without GST, so I don't. I'm not old enough to know, really.
No, the one that I don't like is the fuel excise.
Okay.
Why is petrol cheaper?
My friends messaged me the other day and said, go down to Belmore Metro, the United, like one of those ones that water down the petrol. It was like $1.
My cousins again.
It was like $1.50 or $1.60 for 98 premium. $1.50 a litre.
Yeah, no, it's just I don't know what's happening in the world right now. We could predict all we want,
It's
but
this can go honestly either way.
all we know is Perth keeps going. All right, Manny, thank you so much for coming on the show today.
Thank you. I enjoyed it.
Where can everyone reach you?
At investormate_ on Instagram, at Manny97_ for my personal Instagram. 044 9955 is my personal number, and www.investormate.com.au.
All right. And if you need any help with your finances, whether it's an investment loan, a pre-approval, if you're a first home buyer, you can reach out to us at www.itsimple.com.au and you can book in with us and we'd be more than happy to take care of you. As always, that's Some Schmo. I'm Joe. That's Emmanuel. And thank you for watching The Finance Show with Joe.